Good morning, Market Chameleons. Everyone joining us the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared screen and the disclaimer. Realize that Market Chameleon, Dimitri, and myself are not registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show is for informational purposes only concerning the Market Chameleon tools and process. With that, Dima, you ready to get started?
Yep. Good morning, everyone. Let me share my screen. As I'm doing this, quick note, anyone joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. We'll keep an eye on it, and he'll let me know, read them back to me. And to give you a couple minutes to put those questions in, we're going to start out looking at our pre-market report to see what type of insights we could get on what's going on in the pre-market hours, and then we will move on to our questions. So pre-market report here. Up top, we start out with this calendar view, and this shows summary statistics on what happened in the pre-market hours on a particular date. We also include what's going on today. And the idea behind there is that you could compare today's activity to what's been happening in the most recent days. And this allows you to see if there's anything unusual or if you can eyeball a particular trend. So let's take a look at today's activity. This is April 26th. We're right over here. And so far we see we have 567 stocks trading higher in the pre-market, 265 stocks trading lower. We have 238 million shares trading on up volume, 41.5 million on down volume. And if we convert that volume to dollar value, we have $4.9 billion worth of stock trading higher, $1 billion worth of stock trading lower. So far, just from that perspective, it looks like there is a bullish lean in the pre-market trading. Let's look at it from a couple more perspectives, and then we'll move on to our questions. And I'm going to slide down a little bit. And here we have a more granular view. We see stock symbols, prices, and price changes and volume in the pre-market hours. We have our most active stocks over here, our biggest percentage gainers, biggest percentage decliners. And so far, we have 145 stocks that are trading higher in the pre-market, or that made our biggest percentage gainers list. All right, so these are biggest percentage gainers that made it onto our biggest percentage gainers list, and 56 on our biggest percentage decliners. So this also points to a more positive lean or bullish lean in the trading in the pre-market hours. Now, to make this list, we do set thresholds because stocks in the pre-market can be liquid, trade on low volume. But if it meets our thresholds, it makes it onto this list. It can include stocks that are low cap stocks. You know, here's market caps over here. It could include ETFs. It could be a leveraged ETF. It could be an inverse ETF, closed-end fund. So to narrow down this list to a small group of stocks, we could use the filters above. Up here, if you have a watch list and you track a certain group of stocks that you monitor, if you created that watch list, you can filter this pre-market report by those groups of stocks. We're going to use this filter here in ETF in our example. So I'm going to click on that filter, and you get a drop-down menu to select from your different ETFs in here. We're going to choose this top one, SPY, for our example. So when I click on it, the list below gets filtered by the stocks that are holdings in the SPY ETF. And what we did here was now narrow down the group of stocks we're trying to analyze to S&P 500 companies, because the SPY ETF is the S&P 500 companies. And here quickly we could see that 19 of those stocks made it on to our biggest percentage gainers list. 10 hit our largest decliners list. So this also points to a more bullish bias in the trading in pre-market hours. So we looked at it from 3 different perspectives, and they all kind of have a more bullish lean as far as, you know, the ways that we looked at it. So we gave it a couple minutes. Well, if you have a question, I'll take it now.
Nothing's popped up, D.
Okay. So I think we did get a question. We had one question left over from yesterday. One question we got over the email. So let's take the first one was from Rob, and I think it had to do with, he was looking at 0 DTE options, I believe over here. And the idea here is that you could look at historical statistics, how the stock moved between a certain time of day to the end of the day. So, you know, if we put 10 a.m., we could look at different, well, right now the straddle's closed. So this is yesterday's straddle. So we don't have the most recent one for today because markets are closed. But here we could see how, you know, the stock did between 10 a.m. and close historically, how the stock moved, and what the straddle premium was between, you know, 10 a.m. and the close. So this gives us kind of benchmarks that if we wanted to see, like today, it's Friday. Let's say we wanted to even pick day of the week. And let's say it's 10 a.m. Right? Like the market, let's say the market's open right now. We're going to pretend the market's open. It's 10 a.m. and we're looking at the 0 DTE options. Well, 0 DTE, what does that mean? The options are going to expire today. At the end of the day, they're done. And we want to take a look at the 0 DTE options and then compare them to how are they priced now versus what are they usually priced, and what does usually the stock do? So we could hit that 10 a.m. on a Friday. We'll load it up. Now, keep in mind, if it's 10 a.m., it'll bring up, right now, we don't know what it's going to be, but it would bring up, you know, the most recent straddle. And then we could compare that. Okay, well, usually the straddle is priced at 40.46% of the spot price, which would equal to, like, the straddle would be on average 232 and about 0.4. And how does the stock actually move? Because the straddle's trying to price what the stock will move, you know, between now and when they expire. So, and historically the stock moved on average 0.48%. So looks like a little bit over $2. You know, these would be the dollar equivalent values of the spot price. And Rob asked the question, well, you know, what about if we didn't go to the end of the day, but we wanted to see how I think the stock performed intraday, like say from 10 to 11 or, you know, 11 to 12 and so forth. So not on this report, but if we go to, let's go now to SPY. And under the tools, we're going to go to intraday returns. So here it's, you know, it's just auto set to like whenever the last snapshot was. But let's say we wanted to see how does SPY tend to perform from 10 a.m. to 11. That's what we're interested. And let's say we wanted to know on a Friday how that happens. Okay, so let's say we pick a Friday, because today's Friday. We don't have to. We could look at all the days. Let's say we wanted to specifically see if there's something between 10 a.m. and 11 a.m. on a Friday. Okay, so let's pick Friday in SPY. And then we're going to say our start time is 10 a.m. Okay, so what it does is it goes back in history and says, okay, find me, if all the, what the stock was at 10 a.m. on Friday, right? It looks at the 10 a.m. 1 minute VWAP. And then we're going to say, then stop it. And I want the return from 10 a.m. to, let's say 11 over here. So 11 a.m. So that 1 hour, that's what we're looking at. The 1 hour from 10 a.m. to 11 a.m. on a Friday. And we want to see the return statistics for SPY. All right. So this is what, and I'm going to just look at all the data, but you could limit it, to the last 4 weeks if you want, 8 weeks if you're just interested in the most recent data. Maybe you see a trend or whatever, but let's just look at all the data that we have. I'm not going to put any events in there for now, but let's just calculate that, right? So I'm going to calculate it. And then here are the stats. These are the returns historically. And we kind of graph also the returns. So here we see that we have these absolute average returns. And what this is doing is looking at all the returns from 10 a.m. to 11 a.m. And if it's a negative return, it converts it to a positive. And then we sum them up and average them out. And the idea there is we want to see the magnitude of the move up or down. How much volatility does SPY have in that 1 hour? Okay, so that's what the absolute returns is. We're trying to see what are the moves look like. So if we took the average of all the positive absolute returns, it's 0.2%, could be 0.2 whatever, but we round it. But then we do display that. What would the dollar value of that be equivalent? Right? You could do it on your calculator. So just to make it easy, we take the percent multiplied by, the spot price to say it would be equivalent to moving up or down $1.15. Okay. And then we look at the median return. So the median return is saying that if we took all the returns, and cut them in half, like, where would the return be? And the idea there is to see if there's a skew, because if there's a skew, the average return will be further away from the median, right? Because there's an outlier that pushed up the average or pulled down the average. So the median returns is similar. So it's $1.01. So it doesn't look like a big, skew to the average. And now we have an idea of the potential movement, right? The potential movement of one way or the other, 0.2%, $1.15. So now, we're now starting to map out and model potential risk versus potential reward. Then we look at the simple returns and say, okay, now give me the average of all the returns, positive or negative. What is the average? So if we see a big positive or negative, it could indicate that there's some kind of a positive or negative drift, or some kind of, something going on that's not zero. So here it looks like it's close to zero, right? 0.5. What is the best move to the upside, and what is the worst move to the downside. So this is the best move to the upside, worst move to the downside. So you can see here, if we took the historical best move, that would be equivalent to $3.06 up. If we took the historical biggest move to the downside, it's $4.02. So now I'm having my averages and ranges in front of me, right? I'm building the picture of my potential risks, right? So if I have a model that is looking at a certain reward, I'm also looking at my potential risks. Then we move on to another section over here. And this divides the up moves and down moves. Okay. And we want to compare those. So if we took all our up moves and put them in one bucket, meaning anything that was above 0, and put them in one bucket, and then we took all of the observations that were down moves from 10 to 11, and we put them into a separate bucket, and then we analyzed them separately. So on average, all the up moves average $1.09, all the down moves $1.21. So here, what we see from our data is that there's a slight skew to the downside as far as the magnitude of the moves. Okay, so we could see here that, yes, on average, if there's a down move, if the market happens to move down instead of up, well, it looks like, that move tends to be, on average, bigger move than the one on the way down. And if there's, and that's based on the averages, and that's based on even the max moves, right? The max move down, you could see, is greater than the max move up, and so the averages. So if it was, think of it this way, if it was a 50-50 up or down, well, when you flip a coin 50-50, well, if heads pays $1 and tails pays $1.10, it's not exactly a 50-50 game, right? Because on one side you're gonna make more or lose more depending on which side lands. So this is what we're looking at, saying, okay, if we're looking at just up moves and down moves, if those are the only two ways the stock can transition, right? It could be unchanged, or it could move up, or it could move down. So those are the two ways that the stock can transition. So given those two state, giving the current state and the way it could transition, if it transitions up, I want to know potentially what it, how high can it go? And if it moves down, how low can it go on average? And that's what these averages are pointing out. So you want to know those historical numbers if you're trying to map out potential moves. So now that we have those numbers, we also want to know, well, what is the frequency of the moves, because now we have these two ways it could transition up or down, right? That's what we're analyzing, up or down. Right now, here we did the magnitude. Now we're doing the up or down. Well, given that there are two possibilities, then the stock could move up or the stock could move down. But is it always like 50-50? If we took lots of observations, does it always happen like half the time it's up, half the time it's down? Does it have a tendency to go more up or down? So this is what we want to know, like how did it move in the past? Was it like, if our expectation is that half the time it's up, half the time it's down, let's look at the data and see if that supports it. Right? If it's 50-50, that means 50% of the time, our observation should be lower, 50% higher, or close to that. So this is what this is. This is showing us the frequency of up moves versus down moves. So if I hover over it, you could see that so far in all our observations, 55% of the moves were higher, 45% were lower. So based on our data, it tended to move up more than down. I'm not running a statistical significance of that. It's close to 50, but you could run those. But it's close to it, right? With a little bit of a lean towards the upside right now. So if you had to, so what is this telling us is that, yes, the moves to the downside are greater than the upside, but the frequency of the moves to the upside happen more often than the frequency of the moves to the downside. So this is what we're seeing, right? This is why it's important to look at both, right? Well, what are the moves look like, and how frequent are the moves up and down? Okay. So that's what these stats are helping us answer and paint a picture. And here, now we could scroll down, and we could visualize, graph the moves, right? This is the data. You can see going April 28th. So what we're doing is going back a month. All right, wait. Oh, longer. Hold on. These are not, I think this is about, they're not ordered correctly. So I have to take a look at that. But what we're doing is looking at the data, and we're looking at, okay, here are the moves. All the moves are pointing up. So the graph here shows the percentage move, okay, either up or down, pointing up. And then the red bar says the move was down. The green bar says the move was up. And then we have the average over here. Okay, so these are the average moves, this line. So we could see, where it was above the average, where it was below the average by comparing that dotted line, right? The dotted lines, if it's above the dotted line, the move was above the average of all the data. If it's below the line, like over here, then the move was below. And okay, I see what I did, because I put Fridays. I only put Fridays because I was wondering why they're not daily moves. So, okay, so now it makes sense. So yes, so right now, so these are all Friday moves. So this isn't in chronological order. So these are moves, going back in time. And, so that's one of the things the graph's pointing out, so we could now visually see, okay, where when it moves above the line, I see these bars here. Can I eyeball trends? Well, I see two of them here made it kind of in a row, then kind of two reds in a row, two red, I mean, I don't see an obvious trend here, but the idea is that, you could eyeball it. And if something obvious comes out, if you see like 4 greens in a row, 4 reds in a row, then that could be something more to analyze. It doesn't seem to me like anything too obvious, although it looks to a little bit that when we have the bigger moves, they seem clustered closer together. So you could see here, like, 3 moves clustered close together, two over here. And the smaller moves are clustered together as well. So maybe that's one thing to look at. Another is, do we see, greens and reds close together, or are they, very spread apart? Because if you see lots of reds, then lots of greens, that means that, the moves tend to be more clustered together. Like, so, if If we have a down Friday, we might have more down Fridays, or if we have enough Friday, we have more up Fridays. So it's not clear from here. Maybe over here it looks like a little bit of clustering, but it's not like consistent. But that's another thing, to look at. What else can we see from this chart? Well, we see that there's a big variance to the magnitude of the moves. So if the move, for example, every Friday was, 0.2%, like the average, 0.2%. In other words, up $1 or down $1, right? It's either going to transition, it's going to be up $1 or down $1. Well, these bars would all be lined up, consistent, like, with this average. We wouldn't be seeing like bars down here, bars up here, bars down here, bars up here. But there's a big variance to these bars. Like, look how, they could be, almost unchanged. So the move could be very low. We've seen moves very high up here. And we see a lot of that going on. So another thing that we're seeing is that there is a big variance to these moves, that it's not as simple as saying we're going to be either up or up, up 0.2% or down 0.2%. Those are the averages, but there's a big variance around that average. Okay, it could be unchanged, or it could be, $2. So these are other risks now we have to take into account. And we could go and see if there's other contributing factors on like these big days that might have happened where, there could have been releases of some kind of news events or whatever. And so quickly, what we did was we tried to narrow down the performance intraday. This is an intraday analysis of SPY. We gave it a start and end time. And then we looked at the return distributions from a couple different perspectives to quickly assess, what does it usually do? What is the volatility? What are the tendencies? What are the variances? And so forth. So this is a quick way to be able to use this tool.
All right, well, we're right up against the half hour. You did have another question outstanding. Do you want to tell people what it is? Maybe we'll get to that on Monday, because we did have two other questions come in as well.
Well, today we had two other questions come in.
Yeah, off topic. So I'll send those to you. We can get them. One was asking about how does Market Chameleon use AI. Another was asking about Edge. So I'll send both those over to you along with the question you have. We have a bunch of questions to get off next week.
Yeah, no, that's great questions. Yeah, so we'll take those next week. And I think that I had a question yesterday left over about something with like how to use a combination of Market Chameleon tools to find winning trades. Something like
that was from Jackie, who's actually on today. Yeah.
Okay. Yeah. So we have a minute, but I'll try to address that as well next week.
Awesome.
When we like answer those other questions.
So we have a lot to look forward to. Thanks for bringing the question, Chameleon community. Great job as always, D. Have a great trading day and a great weekend, my friend. We'll see you Monday.
Great. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys Monday.
Trading peace, Chameleons. Everyone have a great weekend. Bye.